All right, well, we're going to have a great session here today. Why don't I ask my panelists to just introduce themselves briefly, just try to keep it short and sweet, and then we'll get into the questions, right?
Perfect. I love it. Good afternoon. First of all, thank you to Wes and to Rand for yet another Rare Evo, third annual. It's been incredible, and I love to see the growth year over year, so glad to be here. I am Willayna Banner. I am an investor and a board director for Permuto Capital. I've been in financial services for over 20 years, investment banking, corporate banking, venture capital, and most recently the last 4 years in technology at Microsoft. One of those roles was running Web3 blockchain for the product group. So again, really exciting space and exciting time, and that's why we're all here. So great to be here. Gene.
And I'm Gene Hoffman. I'm the CEO of Chia Network and the co-CEO of Permuto Capital. Chia is Bram Cohen's new Layer 1 blockchain. It is the most decentralized smart contract blockchain ever. And Permuto is our most interesting new attempt at bringing equities on-chain for real.
Great. Well, I promised we'd jump right in. So before you came up on stage, I asked the audience if they've tokenized anything. And I don't think I saw one hand come up. So the first question, I want to know have we had tokenized assets before? Is this a new concept? Because I know it's new to a lot of people, especially here as well, even in a blockchain conference. So what do you think about that?
Yeah, it's a really fair question, right? So when you think about tokenizing assets, in fact, that's been around for some time. So it could be in real estate, it could be commodities, art, intellectual capital, so that part isn't new. I would say, though, that predominantly those types of things are just in a less complex, more loosely regulated space. So what's exciting about now is we're really able to tackle the more complex assets like equities and derivatives of equities and that type of thing. So the sky's really been the limit. And I remember last year in particular, we were talking about what was going to be the buzzword of this time next year. And predominantly, of course, it was regulation, right? So it's upon us.
Yeah, and I'd just like to jump in and say, I think tokenization is one of those words that's very loaded up and means a lot of different things to a lot of different people. Equities today, Microsoft stock is in some ways tokenized in a database at the DTCC. So, it turns out equities are actually in many ways one of the most easy and relevant items to tokenize because it's very close to how that world already works. But also, a lot of what you hear around tokenization is taking some sort of synthetic equity, not necessarily the equity issued by the issuer, and it's not necessarily the equity. It's often like a claim on the equity or a claim in debt on the equity, and so it's very different than like owning a piece of stock.
So, you both covered a lot there. Equities, commodities, real estate, there's a lot of things that we can tokenize. How are y'all addressing this very complex landscape? Because aren't these very different fields with different regulations?
Well, you have to start with security. The Chia blockchain is a total redesign of, from first principles, how would you improve on proof of work and how would you add smart contracting to that? And so proof of space and time is the first new Nakamoto consensus ever. And Chia Lisp, a difficult programming language, but it turns out that smart contract programming languages are the most adversarial environment known to programming. And on top of that, we've built a user experience which allows true peer-to-peer trading with what is a whole different paradigm of self-custody. And so you're actually able to hold a national market equity in a wallet that is controlled by your phone. If you lose your phone, you have 24 words not to spend the money, but to start a, say, 12-hour delayed recovery process to put a new phone in. So all of a sudden now it's very hard to steal, very hard to lose, and using offers, which are basically direct atomic swaps that are kind of composable, you can actually propose, hey, I want to buy a Microsoft dividend certificate for 45 USDC. So it is going in and really following the rules, both by having a technology that knows how to do that, and then in Permuto's case, we're actually filing S1s to decompose Microsoft, Apple, and Broadcom stock into something neat and new.
Wow. Anything to add to that?
No, well covered. Well covered, Gene.
Yeah, definitely well done. So I've been watching the news the last few weeks, and I heard a lot about what's happening in Capitol Hill. We have Clarity Act, the Genius Act, stablecoin regulations, clearly defining who's overseeing what. How are y'all is this changing the way that you're approaching your problem of tokenizing assets? Is there any change that is now kind of more relevant because of the regulatory updates that we've had even just recently?
I would say it's mostly certainty. We took a look at the world and felt very much that the traditional regulatory system can work. Now, I think a lot of people have to be pretty sophisticated to understand how to do that. And so, for example, Genius is very valuable because it makes it that much clearer that paying somebody dividends in a stablecoin is completely legitimate. It wasn't that you couldn't, in fact, because again, the great thing about registering equities is as long as you disclose what you're doing, you can kind of do what you want to do as long as it's legal. And so we were able to take this paradigm and take a slightly better technology stack and go forward. Now, I will say the thing that's really changed is we had to move quickly. I think there's a lot of folks who want to do things here. There's a lot of noise around kind of layer 2 synthetic tokenized equities. I have some doubts that just tokenizing equity actually matters because you can go to Robinhood and trade for free and it kind of works from the end user's perspective. So I think it's going to have to be these offerings of tokenization that are creating new products and new opportunities that users haven't had before. But I love the environment where you've got an SEC commissioner going, hey, if the IRS doesn't help you, call me, I'll yell at them. This is the current environment we're in.
I totally agree. I think from our standpoint, we really do actually believe that the current landscape today is already, has the foundation for, compliant blockchain technology, right? I think the key, though, is really ensuring that the application of these respective regulations are appropriate, because you also cannot govern something that you don't understand. So to Gene's point, it's actually quite refreshing that you have folks at the SEC and some of these other agencies who absolutely are on board and absolutely do understand what we're trying to do. There's been quite a bit of good, healthy back and forth discussion around how things will actually work. But it's key that the discussions are more about how things will actually work versus what is it, right? Because that would be a very different conversation.
So one part of the finance world we've seen a lot about are ETFs. Right, we've seen a whole growth of crypto-related ETFs in the space, and I'm curious, what is Permuto's role in this? Are we focused on tokenizing all securities or something else?
We're doing something more interesting than that. We're taking the largest dividend-paying stocks, about 86 of them, and we're actually separating the dividend from all the rest and trading those two things separately. Today, nobody buys Microsoft stock for the dividend. It dividends about 0.6%, 0.6%. But when we take them apart, you're going to be able to buy a Microsoft dividend for about $45, and it'll earn you about 5.5% interest. And in some ways, that's better than treasuries. If you think about what Microsoft means, and if the dollar went wrong, you're still paying your Azure bill. And so we're going to roll through these 86 securities, and we're able to do this because managing all of the underlying corporate actions and letting people vote and paying the dividends is tremendously cheaper on the blockchain. And I'll give you just one example of that. We have to give people K-1s, tax documents, at the end of the year. We're going to have to pay $400,000 per trust, so per company, to have Price Waterhouse wander around brokerage firms asking if somebody's trading it and getting your social security number. On the blockchain, we prompt you on the web and maybe even send you something to your wallet, and when you log in, we use your wallet or vault to just figure out exactly what you owned and what you needed, and we generate your K-1 right then and there. And so it just gives you a sense of how much easier it is to do. And so, this is one of those products where it was worth it to Wall Street to do this product. Matt Levine in his column said, of course there's going to be a less than a stock ETF, and that's what he called us. But that ability to create a whole new asset class of these massive dividend cash flows that you couldn't get at in the past would have worked, period. But doing it on blockchain means that we can drive the cost of managing it and therefore your returns considerably higher. We're starting with a 50% discount of fees on chain compared to being on DTC. And what's really neat is you could buy it in your Robinhood account, come to us and move it over to the blockchain. Or vice versa, if you decide you don't want to use your wallet, you could go back to Schwab.
Excellent example, especially on the K-1s, but consider all the things that we talk about all the time around the effectiveness of why blockchain technology can be so important in certain situations. These are, of course, real-world assets in terms of stocks and equities, and as Gene mentioned, separating the asset certificate from the dividend certificate. But what's key here is, it's what's so attractive about, Permuto Capital coming together with Chia in particular. So you've got this new asset class on the Permuto side, and then you have Chia, and it's like, okay, well, the security there and the privacy there, and of course the speed, making all of that happen. I remember in particular, Trent Martinson, who's our other co-CEO of Permuto, so shout out to Trent. When he first asked me if I had an interest to be on the board, my very first question was actually, well, why Chia Network? You know, with all the networks out there, why is Chia the right one? And so, getting to the root of the why, the security, the privacy, the speed, the synergies together was huge. So, time will tell, but it's imminent. It's eminently happening.
So I'm still excited about the K1. I haven't even moved on. If I could get my K1 in the first half of the year, CPA would be happy. My wife would be happy.
K1 on like January 1st.
It's like the main reason why so many we have to push, the extension, right? To get the extension because you're waiting on your K1s. What a nightmare. Yes.
And then you still have to pay in advance too.
That part.
File your extension and
that
pay.
part right there. Yes.
Yeah. So we're clearly excited. I definitely want to see some of these innovations come to light. But I think you mentioned a little bit about the relationship between Chia and Permuto, and I'd love to maybe just dig into it a little bit more. Gene, you had mentioned when you did your introduction that you actually have roles in both organizations. So I don't know, maybe you can tell me a little bit more about how that synergy could benefit, and if you have any thoughts as well.
Yeah, so the quick answer, but then I want to do the backstory, which I think is more interesting, is that Permuto Capital is a joint venture between Chia Networks and a group called 3V Capital, but they're a bunch of folks who escaped from Credit Suisse First Boston. And this is relevant because I tease people never bank where I bank. My investment bank, because we were actually going to take Chia public and still plan to, was Credit Suisse First Boston. My personal bank was First Republic, and my business bank was Silicon Valley Bank. So we didn't do an ICO. We kept all of the coins that we pre-farmed in our company, and we had originally engaged with the SEC before and thought about doing a Reg A+. We had a bulge bracket investment banker say, no, don't do that. Come back when you're ready. And so in 2023 early, we filed an S1, and I think everyone thought Gary Gensler was going to jump out of the screen and laugh at me. And we got 70 comments back, which is low for a tech company, much less a cryptocurrency tech company. And that was working with Credit Suisse. Then Credit Suisse blew up very famously a few weeks later. We worked that through, and we got down to 11 comments of only like 2 were actual questions. The rest were kind of the end of the process, if you've ever done a S1 or a public process before. But this meant that Trent had watched the SEC agree with us that, for example, offer files aren't an exchange, that we wouldn't be a transfer agent, that there were these innovations that I had come up with to be able to do things like pass across from blockchain and back to DTC. And so when he had been fighting this idea that these large cap equities were mispriced, he basically came to me and said, let's do this on the Chia blockchain. And originally it was only the Chia blockchain. When we dug into it, though, we realized that it wouldn't be that hard to cross-list it to New York Stock Exchange American. And so that's what we're going to do, and we expect that to go live for the first one in the summer.
Wow. Very cool. Gotta give them a round of applause. Y'all are working hard.
Long nights.
And
a lot
mornings.
of rounds of questions. A lot of rounds of questions.
Yeah, absolutely. You guys have taken on a lot, and I guess to kind of change tracks, we're talking about a lot of great stuff that your teams are doing, but what are the challenges that you're facing? If we just kind of flip the script, what's challenging, and what is a interesting problem that you're solving today?
So I think I can tell this story. We were on the phone with the SEC and the New York Stock Exchange, and the SEC were trying to tell both of us that this is how DTC worked, and we were like, we wished it worked that way. We thought it worked that way. It doesn't. And they're like, no, it does. And then the New York Stock Exchange lawyers are like, no, it works the way they're saying it works. So a lot of our challenges are really very deeply buried in the bad rails that are from the 70s. There's a bunch of stuff we would love to do that you just kind of can't do. And in fact, it really kind of hints that there's going to be a lot of financial products that only launch on blockchains because you don't have these. And these aren't regulatory. These are just bad old infrastructure. It's running COBOL underneath, and they can't make a change to the system. Beyond that, it's just doing something completely novel. Nobody's done any of the stuff we're currently talking about doing before. There was a product in the 80s called Scores and Primes that kind of did this, but they lost their tax ruling, and so it died in the 1990s. So there's a little bit of rails for us to follow, but it's paving new ground.
I totally agree. I mean, frankly, we really see the adoption of Permuto really rivaling ETFs in a good way. I mean, this should actually change the face of investing probably forever, which is great because you have, to Gene's point, so many of the building blocks already there, but it's not fit for purpose, really, for what we're doing, right? And so many of the in-depth conversations in the back and forth in a healthy way that we're having is just on these nuanced cases, right? Okay, well, how would this work? And what if that? And so that's where a lot of the time, I think, is being spent. You'd agree?
Yeah, and I was just going to add, I will expect you to see these in ETFs that you can buy from the ETF purveyors you know well. We have to get to about 2025, which we hope to by the end of the year, before they really have the diversity of the different companies that they can build them with. But you will be able to buy these on-chain and on your brokerage firm as soon as we list them again in the next couple months.
Get excited.
Sorry, did you say that we can do this with brokerages today?
As soon as we list, you'll be able to buy it in your brokerage account today. You can leave it there. If you own a dividend certificate, it costs you 14 basis points, and if you move it to blockchain, it only costs you 7 basis points.
It's really one of those things too, and as you're hearing this for the first time, there's certain terms, and you're like, okay, I think I kind of intuitively follow it, but I know when I first heard about it, my first question was, what do you mean this doesn't already exist today? Like, it was like, well, duh. Why wouldn't we want to split out being able to have an asset certificate wherein you can just have the appreciation upside of a particular stock, and then the dividend component if you're more focused on the cash side? I know, as an example, my mother, who's more focused on the dividend side of things in general, would love this type of thing. And so it was a very kind of intuitive, well, duh, of course we should be doing this type of conversation. Why doesn't it already exist kind of thing?
And I don't want the asset certificates to get no love. When you take that $45 out of Microsoft stock, you can now buy a share of Microsoft as an asset certificate for $45 less, which means it will go up faster or go down faster than the underlying stock. So if you're young and you believe in Microsoft and Apple and Broadcom and others, you should get rid of the dividend component of those stocks, use that cash to buy more of the asset component, and grow faster. And then as you get to middle age, you start buying back the dividend amount that you think you want from Apple. And by the time you retire, you've sold all of your ACs. You now have a package of DCs paying you ready cash flow today.
Sorry, was that AC/DC the band, or?
I'm just not wearing the shorts.
Well done, you.
That's Trent.
No, I mean, it's funny because I still have conversations to this day with family members about, their CDs renewing. And my mind is always blown when I think, you still have that? and they're excited to let it renew. So I think you guys are giving me a lot of, like some conversations that I can take back home. So speaking of, users, right, thinking of everyone out there, what are some things that your customers are saying? Like, you've been out in the market, you've been talking to people. I'm curious for like real customer feedback. And, I get some of the glazing that things are going well, but can we be specific? What are customers really saying about Permuto and Chia?
So I think the best way to explain it is two things. One is, when we're actually pitching the current customer base, we don't talk about the blockchain. They bring it up. Like, we never mention it, because if you think about it from just a classic Wall Street perspective, just the ACs and DCs is enough of an innovation to care about. But they quickly jump to, okay, wait, I can earn more. All of these operational things are even better for them. It's really fascinating that. I think I did a little census, and we've talked to 40 different, everything from asset managers who run the ETFs, by name brand, to RIAs who have high net worth and ultra high net worth investors. Everybody loves it. Everybody loves it for different reasons. It's also funny because often you love one side or the other. You'll talk to somebody and they're like, I really love the AC, but who the heck would buy a DC? And the other guy's like, I really love the DC. Who's going to buy the AC? And I'm like, you two should talk. But so all of the usual suspects, all of the classic hedge funds, quant funds, they're all going to trade it. There are also some really interesting things, like if one of these companies gets bought, the DC goes to zero, but it becomes this really interesting hedge option on whether the deal closes or not. There's just all these really fascinating use cases. And the case that I love that really gets people to understand this is Pepsi. So in 5 years ago, if you're looking at Pepsi, it traded at about a 23 PE. And I don't know how many people you were investors, but that's a pretty darn high PE for something that's not software. And you'd look at that and go, I don't know if I believe that from a valuation perspective, but they've been raising their dividend consistently. They grow a little better than GDP, and people want their Taco Bell and their Pepsi. So if you bought Pepsi stock and dividend reinvested, you would have made about 20%. If you bought the DC only and dividend reinvested, you would have made about 96% when the S&P 500 returned only 69% in the same period. And if you were really extreme about it, you'd short the AC, and you made 119% over the entire period. So all of a sudden, you're taking a stock that shouldn't trade and making S&P 500 exceeding returns. It's a really powerful change to how people invest.
Spot on. I think I would also just add, in terms of the customer feedback, to be frank, it's really going to be about the education, right? So there's so many questions around the how, and even in great examples like Gene just walked through, sometimes it's just going to be, okay, let's just sit down and walk through kind of how the math's going to work. The institutional customers, if you will, tend to get it straight away, but when it comes to us as kind of retail investors and how we wrap our mind around something on the one hand that seems very intuitive, that maybe should have always existed, and then it actually existing and figuring out, okay, well, how do I actually make sure that with my brokerage firm I can get it, and how do I know when to sell or not, these types of things. That level of education, I think, is going to be hugely important as well. So it's of course part and parcel with the success, but once you get it, I think you get really, really excited. Or maybe that's just us. But yes, we can talk about it later too.
Awesome. So we're getting close to the end here, and I'm curious if the audience has retained what we've told them here. Can anyone tell me what AC stands for? Asset
certificate.
All right. Now, what about DC? Dividend certificate.
Yes.
If you two find me after, I got a present for you. Thank you for participating. But yeah, I learned a lot just in this conversation, so thank you, Willayna and Gene, for joining us here. And thank you to the Rare Evo audience and everyone here. Thank you for coming and making this great.
Appreciate it. Thanks,
Thank you,
everybody.
everybody.
We'll leave you in good hands.
Enjoying Rare Evo? Then lock in your spot for next year right now. Rare Evo 2026 is already in the works, and it's going to be even bigger. More chains, more builders, more connections. Tickets are live. Go to rareevo.io/2026 to grab your early access pricing before it's gone. Don't wait. Be first. Be part of what's next. We'll see you at Rare Evo 2026.